Call from my boss, I looked around and what did I see? There was no history. There was no central trading information. There was no performance data. Most people didn't know about them. Most people didn't understand them. They had a dirty name. They called them junk bonds. 90% of investment organizations had a rule against buying a bond rated below A or below BBB. And Moody's, which rated bonds, defined a B-rated bond as follows: fails to possess the characteristics of a desirable investment. In other words, it's a bad idea. They didn't say at what price. Maybe it's a bad idea at par, but it's a good idea at 90 or 80 or 70. But their definition was it's a bad idea. So if you have all these bad marks against something, isn't it reasonable to think that maybe you can find a bargain there? And that's what happened. Fast forward to today, now everybody knows everything. You know, all the performance data is available for everybody, so there's no more ignorance to trade off of. And there's no more scruples. You know, back 40 years ago, people would say to me, well, young man, I can imagine that you could make money that way, but it wouldn't be right to invest in junk. It would be unseemly. We couldn't do that. And today, anybody will do anything to make a buck. So when you no longer have ignorance and you no longer have prejudice, where are the bargains going to come from? So it's harder. And maybe the big money has been made.
What's going on, investors? AK from Fallible here. And if you didn't know who that was in the clip, it was Howard Marks, the founder of Oaktree Capital. Now, Oaktree manages $100 billion, and Howard himself is worth almost $2 billion, so they're doing pretty well. You might have read one of Howard's investment letters to his clients, which are really popular in the investment community because that guy is really smart. Now, Oaktree Capital as a fund is famous for focusing on distressed debt and high-yield bonds. And they're actually one of the funds that were holding Toys R Us debt. And if you don't know what I'm talking about there, I made a whole video about the Toys R Us thing, which I'll link to above if you haven't seen it. Make sure you check it out. So in this clip, Howard was talking about when he first entered the high yield bond market back in the 70s. And at that time, because the market was so new, he was able to exploit two edges: informational and behavioral. And you know, there's basically three edges total that you could take advantage of in the market. You got the informational and behavioral, like I already said, and then you also have an analytical edge. And if you want to review what I'm talking about with these edges, I made a video about that too, which I'll again link to above. Check it out. So the first edge he had way back when was informational. Back then, no one was looking at high yield bonds. There was no data, no price history, no nothing. It was a pretty new market, so people didn't even know about it. And if they did know about it, they didn't understand it. So just being able to get basic info and have a basic understanding puts you way above everybody else. And that's the benefit of being in a new market. If there's not much information and people don't understand it, then very simple things can give you a huge edge. There's a lot of opportunity in places that aren't popular. So one of the examples we gave in the last video on edges was the microcap space. There aren't a lot of funds getting into that space because they have too much money. They can't invest $100 million into a tiny microcap because it would move the price too much. So they're not even looking in that area. But for smaller investors, if they're looking in the microcap, they could actually find some great opportunities. And the information they're getting on those companies isn't broadly known, and you can kind of consider it as brand new little markets each time. Another example is cryptocurrencies a few years ago. Back then, and even now, most people had no idea what cryptocurrencies actually did. Blockchain and Bitcoin, they were just buzzwords and nothing more. But if you were in that brand new market early, you were able to ride the trend that we just saw and make a ton of money. And I had friends that were in that market early from 2015 and before that are now millionaires. And they weren't the smartest people in the world or anything, they were just in the right market at the right time. And their understanding was enough to put them ahead of everybody else. And by the way, if you got examples of new markets that you're seeing develop right now, make sure you comment below and let me know. I'd love to hear about them. But you know, while new markets can be really lucrative, they can be pretty tough too. The downside of not being a popular market may actually mean something. If no one's looking at it, it might mean that all the assets in that market are trash. And with any new market, there's going to be a lot of things in there that don't work out. Entering that market itself may be a huge time waste and bust. You might not get anything out of it. For example, in the cryptocurrency market, how many different coins were there that never did anything? How many ICOs were there that were actually just frauds? It was like a minefield, and it wasn't exactly easy to find the best investment. In a lot of ways, the new market is a lot more risky than an established one. But if you know what you're doing like Howard did in the high yield market, then there's a lot of money to be made. So the other edge that Howard had in this market is behavioral or sentiment. So as he explained, no nobody was a fan of high yield bonds. 90% of funds had rules that said they weren't even allowed to invest in them. Credit agencies flat out said they weren't good investments, and they were even called junk bonds. And they weren't thought of as moral investments. And when you see an area that has that much negative sentiment surrounding it, it's most likely overdone, and there's probably some good deals to be had there, which is exactly what Howard found. And that's actually my partner in MacroOps, Alex. That's his specialty. He loves going into those beaten up sectors that everybody hates and finding gems in the rough. He's a contrarian. So one of the themes he was tracking recently was the death of retail. Everyone thought that online was completely going to destroy brick and mortar retailers. So you had a lot of retail stocks being sold for a deep, deep discount. So Alex was able to swoop in and find the ones that were actually extremely undervalued, purchase them, and ride them on their way back up. And we've done something similar on this channel with all the stocks I've been talking about that'll survive the Amazon threat. You know, I've done videos on Stitch Fix, Best Buy, Etsy, all those companies that people thought Amazon was going to destroy. But most of them are doing pretty well, and you could have got them at a great discount during all this negativity. Now, the last thing that Howard talks about is how hard it is now, because both that behavioral edge and that informational edge have been eaten away. Everyone has all the data they want on junk bonds now, and no one has a problem investing in them. It's become just another popular asset class. So when that happened, Oaktree had to move to the third type of edge, analytical. And in my opinion, this edge is the toughest to execute, because you're competing against a bunch of other people with all the same data. And your job is to put that data together in a different way and come to a different, better conclusion than the rest of the people. Outperformance there becomes really tough, but like I said, Howard is an extremely smart guy, and he's done a great job at Oaktree doing it. And that's part of the reason why everyone loves to read his memos, which you should definitely check out if you haven't before. So think about your own trading edge. Is it based off a newer market that isn't really popular yet? Or what tactics are you using to preserve your edge? Let me know in the comments. And if you haven't already, make sure you subscribe to this channel and hit that bell for notifications of new videos. We publish 3 a week, all market or business related. So subscribe, and I'll see you in the next video. Stay fallible out there. Bye.